Hello traders, welcome to another YouTube live here. Like always, we will start off, well, not like always, this is actually a new feature that we're implementing recently, where we start off with the news and then we go on to the price of BTC. But we always start off with some little discussion about how the markets are doing. Obviously, it's the weekend. We've seen that consolidation continue, kind of around that 55 to 5K-ish range. Not really seeing any lower lows. We've been seeing higher lows actually. And then the horizontal level of resistance is holding, whereas the descending level of resistance has broken. But we really haven't seen much excitement from the bulls from that really. So we'll talk about that within the smaller time frames in the later part of the video. But quickly going to dive into some of the news that we are able to see within our Discord. So we have a bot that posts basically any relevant cryptocurrency news within our Discord absolutely for free. So you can always stay up to date with what's occurring within the blockchain crypto space. We got some interesting things here. We're not going to dive into them, but this is just a quick overview of what's happening. If there is some major catalyst, obviously we'll dive into it. But at this right now, we're just going to be going over the titles here. So we got some things like U.S. firm plans $100 million ICO to fund electric vehicle production in Africa. BTC plunges, YouTube ban and other challenges, bad crypto news of the week. And then you got things that are talking about a potential drop in volume in the Chicago Mercantile Exchange, which is the exchange that institutional traders and investors use to get in and out of the markets. And this article talks about a potential jump ship within the CME futures because of the low volume. If you would like to read more, definitely check that out. Some stuff about Binance. Canon sued over alleged fake deal. Nothing really too important here. China focus. So if you want to read more things about China, there's a Jeffrey Wernick on Cointelegraph China focus. So this just talks about more information regarding China and cryptocurrencies related in that regard. Extreme fear grips market despite oversold Bitcoin price metrics. Definitely in oversold territory, but while we are seeing a little bit of a dump here, we will get into that in a little bit later in the video. I see that within another monitor here. 3 reasons last week Epic Bottom's price has crashed has a silver lining. You can, if you're averaging in, definitely not a bad time to be averaging right now. Obviously, if you are not active, you might not want to be trading, but being able to slowly dollar cost average would not be a bad situation to find yourself in. And then not a whole lot more. U.S. sanctions strategy in crypto, the cracks are showing in Iran, and then data transparency and fake trading volumes, institutionalizing crypto. So there's some interesting news articles if you are interested in reading more there. It's within our Discord. So now that we've went over a little bit of the news, we will now cover the different alts and BTC overall. Now, one thing and one similarity we did want to make was this right here. So I'm just making sure I have the right one yet. So this is it right here. So I'm going to quickly go over the daily and the 4-hour just to understand where we are. And this is a previous time that we're going to look at a little bit later on in the video. So this is CME futures. Not really anything has happened because obviously it's the weekend. We will be seeing what it opens to. And then this is the daily chart in Gemini Exchange where we have the exchange running 24 hours so we can actually assess the price action. So one thing to note when we are making the comparison is we had a tremendous amount of buy volume. There was a lot of volume and traded amount of transactions here. There's a lot of people buying and selling around this zone. So we know that this is a high sensitive area for the price. Now, in that said, I think we do also have to account for the geopolitical, the economic, the virus, the many things that are happening around the globe, and the massive shift in investor psychology very quickly from, not super confident, but still seeing stability in overall markets to then almost like total capitulation where you're seeing S&P drops massively. Bitcoin dropped 25% in a single day. Like it's crazy what we're seeing here. It's even crazy to think that Bitcoin's, at 5275. Just, not even a month ago, we were basically double that almost. So it's crazy, but we are still making the best of it here. We have to stay calm. We have to stay focused on our goal. And we did get a little bit, not carried away, but the consolidation, I'm going to be more patient. I did take a couple minor small trades within the consolidation. Did not work. I'm just going to say fuck it and basically just wait until it gives me in direction that allows me to have an edge within the market. And we'll talk about that within the later part of the video. So basically at this point, we're just consolidating. We do understand that we have a very strong level of support at around $4,900. If we zoom back out, we see that there's a strong level of support with many support zones touched basically in April of 2019 on the way up of the bull run. And then if we zoom back all the way to 2017, late 2017, we can see the same zone was a previous key level of resistance multiple times before we shot up above, breaking that key resistance at around 5K, 4,900. So that's where we're currently sitting on top of right now. And it is also a confluence zone with our descending support zone where we have our anchor point right here. And then we have 1, 2, 3, 4, 5. And this is our sixth touch, validating this zone because it's a dependable area that we can use. Now, in that said, if it does break it, well, then we're definitely going to be dropping lower. For how much lower, I don't think anyone truly knows. The next key level of support is going to be around 41 because it was the previous resistance in the consolidation we had in late 2018, started 2019. And then if we go beyond that, the next key level on the weekly is going to be around the 31, 3K-ish $100 zone. There was a $3,200 zone with a level of support back in 2018. And then we see it as a previous resistance and support back in 2017 as well. So those are our main key structural supports that we're going to be looking at if the price does fall again. And then we will also be looking at the actual consolidation we're seeing right now around the 52 5K-ish range, and then comparing it to another drop that we had right around here that showed a similar structure to what we're seeing right now. It's not looking great, to be completely honest, and we'll go over gold as well and looking at the comparison that gold had in reaction to 2008 and then seeing if we could extrapolate a potential idea of what we could be seeing in this major market recession or potentially even depression, depending on how extensive this coronavirus lockdown is going to be. Because obviously if the economy is not able to run and people are not spending money, people are not running their business, no one's going out, massive amounts of different sectors are basically shut down. Tourism, airlines, any entertainment, any real large organization or conference or group or all these things are getting shut down, and people are just going to have to stay home, not spend money, and that is going to have a massive ripple effect within the economy. Combine that with the already degrading economic situation that the globe was in with such low interest rates and people already doing massive amounts of repo market operations, QE from the ECB, all this stuff happening before this shitstorm came in. So we were already in a tough situation before the coronavirus came in and before all this stuff is happening. So it'll be an interesting time, and I think that we will have a deflationary period where everyone is just panicking before we start to get the somewhat understanding that, oh shit, okay, there is now going to be some level of inflation. Okay, we need to be able to put money and store it somewhere, because I think a lot of people are going into just straight cash or US bonds, which makes sense. Yes, their yield is extremely low, but the actual bond price went up very, very significantly because everyone's just rushing to bonds, even though their yield is absolutely nothing. So that's kind of where we're at right now. And then at a certain point, if the velocity of money increases because the government is giving money to literally everyone, and then that starts to pick up and then inflation becomes a problem, then we'll increase the interest rates, and that could potentially create less interest in the bonds, and then people would then come from bonds and more of a I guess, a stable bond yield that's very, very low to potentially gold and silver and Bitcoin and other cryptocurrencies. Hopefully, that is the assumption from me, at least, is we are going to get this big wealth transfer from bonds to, I don't know when, but from these fixed income assets that produce almost no yield but provide investors stability compared to investing in the stock market. Like if it's negative interest, yeah, you don't get money return, but you get to store your money somewhere. And I think investors are so pessimistic that they're willing to have that as an option rather than having even price appreciation. So it's a crazy time. I've been really following the news and really following what's been happening and trying to be up to date with everything because it's very interesting. We are seeing a major historic event occur right in front of our eyes. So, if you're interested in economics, in markets, definitely check out these crypto market updates every day. We will try to be covering not just cryptocurrency, but also the overall market conditions, where we're going to talk about it more and more because it's going to get more and more relevant as time goes on. So, in that said, let's quickly jump back to, I will put a timestamp when we were talking about that economic bit there, but we'll now go back to the smaller timeframes on BTC. We already talked about the large timeframes. We're not going to try to exactly pinpoint where the next level of support is. We're not looking to try to get that very bottom of the wick there. That's not our mission. Our mission is to find high probability setups that are meeting our three criteria: market structure, price action, and VSA. So in that said, we'll basically just jump into the 4 hour here and kind of discuss where we are. And then the 1 hour is where we're really wanting to be talking about what we could be seeing, because there has been quite a bit of similarities, like I said before, with what we're seeing right now to what we saw basically in November of 2018 when we saw that massive dump to the downside. So on the 4 hour, it doesn't look too interesting, but the one thing to note is the higher lows that we're seeing and the complete drop off of volume. That's the two things I want to note on the 4 hour chart. And then this is how the 1 hour looks right now. What we're now going to be looking at is the 1 hour of the zone that we talked about in November of 2018 before the massive drop here. So this in 1 week dropped a maximum of 37%, closed at 29, and this pattern initiated it right here. This is that pattern. This is right here. So if we look on the daily chart, we can see that this little pullback right here back in November of 2018 is going to be this right here. And if we look at the current situation, it looks somewhat similar. Now, it's not going to be perfect, but we see a dump to the downside, a major move to the downside, and then we see a drop off of volume, weakening volume, and then you just see a consolidation sideways. Not wanting to enter this because it's not really giving me a direction. Kind of what we're seeing right here, right? Where we're seeing a huge drop off in sell volume with a massive move to the downside a couple times. Kind of like we saw here, we saw a massive move to the downside, and then we just consolidate for a little while. And, we were trying to enter, we saw potential entry right here, tried to go down, couldn't make it. We got out of the trade, said, fuck it, it's not going to be trying to go down, because we also saw a descending trend line right here. So this was our trade that we took yesterday, and we just said, fuck it, and we got out of it. So that was the trade that we took. We were squeezing, and then once we pushed down below the previous support and acted as a new level of resistance, like so, in the bottom levels there, that's where I took the trade, and then it popped back up. I got out of the trade, and that's not the end of the world. But at this point in time, looking at how the 1 hour is looking right now, looking at the 1 hour before we saw the move to the downside, even looking at how it looks kind of like right here. So, this is how the market looks right now. This is the current market, and this is how it looked before the market dumps. And then we'll press play, and then we'll see it climb up. We'll see it climb up, and it'll hold some ascending trend line. That's what I was trying to create with the trade I had. did not end up working out, and it holds some level, and then once it starts cracking, then you see, let's just put it on auto, then you see the massive dump to the downside, right? So that is kind of what we're looking for here. And we can see there's opportunities on the downside on the 1 hour. We can see at the very low, it pulled back. That would be a good opportunity. Also, if we are just looking at the structure of the consolidation, we can see that the support structure of the consolidation is right there. So we have a couple opportunities here that we could capture. And then also, it's actually looking very similar because within the same thing, this is also a descending trend line that we could have drawn, that we probably drew back in 2018. And then it made a move to the upside. Didn't really do anything. Slowly consolidating. Kind of the same thing here. This is that same descending zone. We made a little move to the upside. Kind of consolidating up. Hopefully we're going to get some level of a zone like so. Kind of like we got a zone like so. And then once we break this ascending support, I don't know if it's exactly going to be here, maybe it could be a little bit lower, but once we break this ascending support, and once we see a couple of these zones get broken, like our horizontal zones, so just talking about the structure support, we can see the structure support would be right around here, as of right now anyways, and then the low would be the candle closure right around here. So that's where I currently see, actually we could just maybe make it a couple, like so. So we got a couple opportunities here for a potential break of the support, pull back once we get the validation that one of these supports are going to be a new level of resistance, seeing 2-3 injections of sell pressure coming into the market with bearish injections and bearish engulfing candles, maybe with double tops, maybe some pin bars projecting above the zone, but bodies closing at the area. We're looking for indications that there's sellers within the market. Once we have that validation, then we can look for a potential short like we can see with November of 2018. So not going to say it's 100% going to happen or anything, but just with how the market looks right now, to me, it just looks pretty similar to what we saw right here where, there's lots of uncertainty in terms of the emotions because of this drop. Same thing with this massive drop. Like we dropped from 91 to 41, more than 50% in a matter of 5 days. So there's a huge amount of emotion in the market right now. So, we're going to get some stability like we saw here, like we're seeing right now. And I don't really want to be playing within this range until I start to see the breakdown appear. Like we see kind of like here, we're breaking maybe the structure level of support or the lowest level of support that we see right around here, which in that case we would be looking to short at around maybe 48 or even 41 to the downside if it does push back down like we saw here. If it does something similar, that could be an opportunity. But as of right now, we're going to just remain very patient because there's a lot of volatility in the markets. There's a lot of uncertainty, and we're just kind of in a bit of an equilibrium right now where we're not really moving up, we're not really moving down. We found our middle ground, and we'll just see where it goes from here. We do have an idea of what we're looking for, but at the end of the day, each setup is going to be a little bit different. This one didn't have really any buy volume within that dump, whereas within this move we saw a tremendous amount of buy volume. So there are differences, so it's not going to be the exact same setup, but in terms of the uncertainty in the market, I think it could dump a little bit more, and we'll talk about why I think that within the next part of the video, going over the comparison of gold and the SPX during the 2008 financial crisis. I'm going to get a little bit of coffee and then we'll talk about that next. So hopefully you understand what we're looking for. Basically like this. We'll talk about it every single day. We do a crypto market update for our students every single day, if not typed or on video every single day. If not, maybe we'll miss one day, but we're very, very scheduled in how many we do and very active in the market. So we will comment and we will discuss if this does come into fruition. It doesn't look like it right now, but at this very moment, we're going to stay patient and see what the market brings us. But it's looking like it could be a possibility, and if it is, that could be obviously a massive short opportunity for us that we could be taking to the downside. And that's basically all I have to say for Bitcoin right now. Just quickly looking at the longs and shorts that have taken place within the market, we see that the shorts have poked their head above kind of the recent high that we've had, that we've been holding. So this zone right here, we see we rejected as a resistance 1, 2, 3, 4, and then now we're popping above the zone. And if we're able to see the sellers come in and push that price a little bit further and validate this area as a support, really showing the strength, that would definitely, for me, mean that there is a shift in supply and demand where the buyers now are going back below the support, probably going to test as a nice level of resistance below the resistance confidence area where buyers aren't really able to get the margin trades above a certain amount. Flip side for the sellers, we're potentially now going to get more sell side activity, more confidence in the sellers, more people entering short positions trying to get exposure to the downside, which in the short term, yes, could drive the prices further down. That totally makes sense. But when it inevitably does move back up and shift its momentum, that does mean that we could have a pretty major short squeeze, which would then kind of create a parabolic move like we saw in summer of 2019, June, July, where we saw the price went from 9K, 10K to 14 very, very quickly. Those are the types of short squeezes that we could be seeing if we get a shift in trend. But as of right now, we're getting a higher amount of confidence from the sellers and a weakening amount of confidence from the buyers. So that's basically what I see within the supply and demand chart that we're able to analyze. The next thing we're going to be looking at is going to be the comparison for gold and S&P. I should say. Just quickly going to look at the markets here. And let's just get right into it. So the chart that you see on top with the candles is going to be gold. And then the orange, let's just make it white. And then make it a little bit bigger so it's easier to see. And then the white you see on the bottom is going to be the S&P 500. Now let's just talk about market structure a little bit within this zone. So let's get our snip. And then compare it. And then we can see obviously that the dates are at the bottom. So then you can see how the price action is looking in relation to the dates that we're seeing. So this is that double top. This is still in bullish territory for the SPX, where people are still looking long. It's looking great. Nothing's really worrying. And then once we start seeing these lower lows and lower highs, that's when, okay, there's a little bit of worry here, right? And then you start to see in that exact same time frame, oh wow, look what you see, right? You see gold shoot up significantly. And then the consolidation continues. You got a little move up. Maybe there was some interest rate cuts, or there was something that occurred that was a little bit more pleasing for investors. You know, they maybe flocked back in a little bit into the SPX, as we saw a little bit of a dive, and then it was a little bit correlated in some sense here, so we're getting a move to the downside, and then we got to move to the downside. But look what happens after a certain point, there's a shift. So when the recession starts, when it is coming in, when it's new, there's going to be deflation kind of throughout all the assets, it seems like. Gold is moving to the downside. SPX is moving to the downside. Dow Jones, silver, mainly everything is moving to the downside at that point, other than, you know, TVIX or shorting or whatever the case may be. But just talking about longing assets, you're going to get deflation. But what you see after is, let's say, when it gets to the worst part of 2008. So we're seeing, yeah, it's not too bad here, but it's making waves, right? It's making somewhat reasonable lower lows and lower highs right here from this point to this point. Here, you're just seeing a massive dump. This is when it gets really bad. At that point, then you see the downtrend, and then you see the pickup in gold. And then when it gets to kind of like the lowest points here, when you're seeing lows, 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 lower high, lower high, lower high, massive moves to the downside. Now you're getting the pickup in gold. You're getting initially a deflationary period, even in safe haven assets, when the market is in absolute turmoil and chaos. But once, not the dust settles, but once the worst has occurred and investors are like truly fucking panicking, then you see the flood into gold, it seems like. As we can see, then you get that strong move to the upside. You get that high breaking that descending zone. It's actually a very well-respected pattern here on gold. Very, very easily to spot. It's a bit of a opening channel. As we can see, we see a high, lower high, lower high, lower high, retesting as a nice valid level of support with a nice squeeze of a wedge. We break above. Previous resistance equals new level of support, another descending zone, and then we get a massive move to the upside. So there's a lot of bullish pressure after that initial zone, right? So that is what we're looking for BTC. So in my personal opinion, with looking at how 2008 went, obviously we can't extrapolate exactly what happened in the past and say, yes, this is what's going to happen because we saw gold do this and BTC is going to be acting similar to gold. We can't make that. But Bitcoin has never been in a recession before. Bitcoin has never seen an opportunity to potentially capture some of gold's market cap because of the rush towards safe haven assets. Let me just get a little drink of water here, or a little bit of coffee. And BTC is, in my opinion, in a prime place to receive this this shift of wealth in this very, very difficult time. But in my opinion, it makes sense that BTC is going down. Looking at historic situations we've had in the past, looking at different safe haven assets that we've seen in recessions, we usually get a deflationary period where we're going to get a significant pullback before we start to see the push to the upside. You see, after the move up, yes, we did get the 2009 crisis to start to kind of end in a way, and that's where Bitcoin may play a part, is when we start to see the lows here. So theoretically, it could be carnage for a little while longer here, because where we are right now is still not far away from the all-time high. Like really, if you're looking at it, we see 1, 2, 3, 4, 5, and then you see a strong pullback. You know, if we're looking at where the market is right now, you're seeing 1, 2, 3, 4, 5, and then this is that pullback. You know, if it does break the zone, we could see another pullback a little bit higher, but we're still doing relatively well in terms of where we are from where we could still be heading. Just looking at the overall outlook, you know, like this support is so attractive right here, and that would be a nice 50% drop from the high, 52, 53. So where we currently are right now, we're around 20%, and we still got another 30-ish, maybe a little bit more to go. So until we hit our strong level of support, it doesn't mean 100% will happen, but just looking at previous market structures, where they've gone in the past, I wouldn't be too surprised. But in that said, we still have, like I said, a decent amount to go. So we could still see some carnage from Bitcoin here. So I don't want to scare anyone or anything, but that, in my opinion, is going to be the way I'm going to be looking at Bitcoin, is going to be through a lens of previous historic market crashes, market recessions, and then seeing how kind of gold acted within this area, because we can see that there is deflation within the total panic mania that happened. But then after that, after we got our break of this descending zone, we can see, goddamn, we made a massive bullish move, right? So from, you know, if we entered just at the break, if we entered at the pullback, if we entered at the break of the descending zone of the wedge, highest confirmation, you know, you're looking at to the high. Obviously, you're not going to get the all-time higher. It's 100%, right? And that's gold. Huge market cap compared to Bitcoin. So Bitcoin, because it's less mature. It's a new market still. It's very young compared to a lot of the other markets that we are looking at for asset classes. It's going to be more volatile. So like we've seen in the past, Bitcoin has some crazy price appreciation opportunities when investors are actually interested in putting money in Bitcoin. And I think this is kind of coming out to be a whirlwind of, I can't say perfect opportunity for Bitcoin, because it's still very difficult and challenging, and is not a good situation for a lot of individuals living in the world, because if unemployment goes up, people lose their jobs, people lose incomes, people can't feed their families, kids. All this stuff is obviously very challenging and sad, and it's never a good situation for anyone to be in. But at the end of the day, as traders, as people navigating through the financial markets, it's our job to capitalize on opportunities, and that's our goal. Is we kind of have to detach ourselves from the reality of the outcomes of what we're seeing right now, and still be able to kind of put on our trading caps and say, okay, there is carnage, but then also at the end of the day, we are here to make money, looking for opportunities in the market. And it's a tough situation for people, for sure. But overall, I just wanted to kind of illustrate my idea of the deflationary period before we get into the massive bull run that we could be seeing here. Now, this could mean that the BTC halving is not going to play into effect nearly as much as we think. The overall economic turmoil, coronavirus, the major global macro events that are occurring right now is way, way more important than a BTC halving, in my opinion. That the stock market dropping, the coronavirus, the oil, like there's so many things happening all at once that is going to have more weight to investors compared to, oh my god, BTC's halving is going to come and the block size is going to shrink by 50%. Oh my god, that's crazy. Like, in my opinion, there's a lot more to worry about. There's a lot more to understand instead of just looking at that. So because we're seeing so many things at play here, I'm not really going to be taking out the BTC halving into account as much as the other major economic factors going around the globe. I will be looking at gold as well to see how it's reacting to what's happening right now with the stock market, with coronavirus, with entire economies completely shutting down basically all operations. And we're still, in my opinion, early in the process. We could potentially see, because America was so late with testing, we could see a complete lockdown that we're seeing in China, and Italy could appear in the United States if it comes to worst case scenario. And obviously that would be total catastrophe for the stock market, because nothing would be running, no company would be making profits, and that's detrimental. That would be a very, very difficult thing to see for a lot of people. But yeah, like I said, it's a crazy situation right now. But that's kind of why I think that BTC could see deflation, and then we could see kind of like, I don't know, there's a lot that could happen. But in my end of the time frame, end of recession kind of outcome is the Fed, central banks are going to be printing too much money, giving it to people, shifting the mindset in order to change the velocity of money a little bit. So people are going to be spending more, thus increasing the velocity of money. Money is going to be changing hands much quicker, whether that is like actual physical money or whatever the case may be. But the US dollar and other central bank currencies like the yen, the Canadian dollar, the euro, all these currencies are going to be flooded with new supply, because what the government has to, and what the central banks have to do at this point, is do whatever it takes to combat this virus. And if that means completely shutting down the economy, so no one's going to work, no one's working, everyone is staying home and feeding themselves and just making sure that they are not spreading the virus, and that is by far the number one priority for every government that is affected, which is basically every single government. There obviously will be a major economic impact through that, and the government will already hinted and will have to basically either stimulate the economy one of two ways. The first way would be actually giving it to banks, and the other way would be giving it to the people, like sending them money one person at a time. And it's happened in the past, and it's something that could shift a lot of the psychology in the U.S. economy. And why do I say that is because they could just keep on printing more money and give it to people, and then that inevitably could create a little bit of ease for the American people, because then they'll say, oh, well, the government will take care of me. They can just print more money and give it to me, right? That's not a problem. And then they'll go out and spend a little bit more money if the coronavirus passes away. The increased amount of supply and money, gets introduced. And then if, let's say hypothetically, if this all blows over and the psychology of the masses finally inevitably gets to a point where they're able to kind of settle and start being a little bit more comfortable, well, then the velocity of money will increase. The amount of spending that occurs within an economy will increase, thus the inflation will occur. You will see all the money printed that is going to emerge, and that's going to create the inflation to rise even more. The governments and central banks will have to increase the interest rates, and then you'll kind of see, I think, what could possibly happen like we happened in the 1970s and 80s, where we had massive inflation. Interest rates were at like 20%, and we had to get off the gold standard. We got it to, we could not sustain the current financial system because we were printing too much money and we didn't have enough gold reserves. Well, at this point, we're not even on the gold standard anymore. We're just printing a shit ton of money just to save our asses. So at this point, if it does get worse, we're just going to print as much as we want. There's nothing holding us back. And then once, like kind of we saw back in the 70s, 80s, that inflation started to increase, well then we just printed too much money for us to be able to handle it. And I think inflation will start to come in, and there will be potentially hyperinflation, and then at that point people will not want to be holding US dollar. Right now people are holding US dollar. In my opinion, it's a stable currency compared to what we're seeing in the markets with stocks, with oil, with Bitcoin, with silver, with almost every single asset. It's dropping. So holding cash is not really a bad idea. But in terms of what we could be seeing in a more global macro sense, I think that is the kind of the outcome that we are going to be turning into for the next, I guess, handful of years. And that's my speculation, is deflation for all assets. Yes, BTC will drop more. And a lot of people will think that, yeah, Bitcoin might be dead. Bitcoin will not be a safe haven asset. A lot of people will completely have no belief in it at that point because they invested having and they had a lot of hope or whatever. But at the end of the day, I do think that even though this deflationary period will hit Bitcoin hard and it might potentially drop lower, that's the setup that we're kind of anticipating actually. So even if it drops lower, we're going to be trading it. We're going to be trading into crypto markets, profiting off the volatility, and we're going to be waiting for that time when the market shifts into a point where people are going to be looking for safe haven assets like we had basically at the end of 2008, start of 2009. That is when we will be looking to enter BTC very, very heavy, because we're going to be lower than where we are right now. We're going to have all this fear, uncertainty. No one's going to be prepared for what's going to be coming, in my opinion. Everyone's going to be thinking, holy shit, that was the worst fucking crash I've ever even witnessed before in my life. Okay, I don't want to invest in anything. I just want to hold cash. I just want to be okay with it. And then everyone's going to be on the cash side. And then once cash becomes inflated and people don't want to be holding cash, where are they going to turn to? This is the opportunity, in my opinion, that we are waiting for as cryptocurrency investors. Gonna get some coffee here. So that is the comparison of the S&P 500 and gold, and kind of what happened in 2008, what we could be seeing in the future, and all around the kind of macro view of how I view BTC and what we could be seeing here, because at the end of the day, no one truly happened, but it's good to think about what could happen, and it's good to think about all of the different possibilities. It's a very interesting time we're living in, and that is my take on how we could be seeing the outcome of this. So in the shorter term, we could be seeing more deflation, aka the price of assets going down, BTC dropping even further than where we are now. Totally plausible, totally in the cards here, so that is potentially what we're seeing. But at a certain point, there will be a time where the Fed will overreact and central banks will overreact, print too much money, causing inflation, potentially even causing hyperinflation. Investors will want to get out of cash into assets that have a fixed supply because the quantitative easing, the repo markets, this immense amount of money printing will cause worry of inflation when people are so cash heavy. Right now, people are worried about selling stocks, right? Like, yeah, everyone's like, oh, hold on forever, it's fine. But at a certain point, people are going to get more and more worried when they're selling 50%, 60% of their retracement come down, like 70% of their portfolio go down. At a certain point, they're going to say, fuck it, and just hold cash because it's at least stable at that point in time, right? And the US dollar being stronger because everyone's going and driving into the US dollar. But at a certain point, in my opinion, the Fed, the central banks will overreact, print too much money, go too far into the balance sheet that they just are printing themselves into oblivion. And that's when the overall investor and overall population will think, oh shit, they're really printing a lot of money. This could lead to inflation because the amount of money they're printing. Okay, where do I put my money in that allows me to know that there's a fixed amount of supply, that I can be rest assured that there's no central entity that is able to print this asset that I have into oblivion, because I've seen it happen before. That's where cryptocurrencies could fit within this global macro sense that we could be seeing unfold within the next handful of years. So very, very, very interesting time that we're living in right now. It's a little bit off topic, but why not? I will put show notes in, obviously, but that's the global macro sense of where we're currently at in the market. We will go over these a lot more. If you like them, drop a comment. If you think that we should just be doing crypto market updates, just looking at the cryptocurrency market, drop a comment as well. Like I said before, I will be going over show notes within the comments. So if you just want to be looking at, for example, Link, XRP, and BTC, just click those 3 time frames or times in the comments and you'll be sent to them directly. Now we'll go into the alts. We had a pretty good discussion about the overall outlook we're going to have for the next little while here, because it's definitely very, very important that we try to understand where Bitcoin fits as an asset, not just looking at the price, but where it fits in potential investors' portfolios. Because at the end of the day, it's a massive amount of people who have to buy it in order for the price to go up. It's not just institutions, obviously have a major part of it, but it is the psychology of kind of the world globally having more confidence in Bitcoin, and that's where we're starting to see the massive price appreciation. Right now, we're not seeing that. We're not seeing the confidence. We're not seeing the surge in pressure. We're actually seeing the opposite. We're seeing liquidation in a lot of exchanges. We're seeing a lot of people selling, a lot of people just panicking, a lot of people not knowing what they're doing. If you are one of those people, stay calm, not a problem. If you've just held and you're not really planning on selling in the future, you still have the same amount of Bitcoin, that's not a worry, and time will pass. The final thing I think we're going to touch on is oil. Not really a whole lot has happened. We got a strong level of support at $30 and a strong level of resistance at around 35. So we're currently consolidating right now. Not really seeing a huge discrepancy. The gap fill would be pretty significant to move if it does occur. And we are going to be quickly talking about this kind of every single crypto market update, although not a whole lot has happened. So I'm not really going to be discussing it within this video. So Bitcoin is looking like it's dropping a little bit. Like I said, we can see it's falling a little bit, but what we're looking for is something like this, right? We're looking for, can't say 100%, but you can see there's a big shift in trend right here, where consolidation and then boom. We're not seeing that boom yet. We're still in the consolidation. Now, if it does start to shift down here, then that could be the boom, right? That could be what we're looking for. But right now, we're not seeing that shift, so we don't really want to be trying to get that nice entry, because on the larger time frames, we're not really seeing any movement. Yeah, we're seeing a little bit of movement to the downside, but that's nothing really to get excited about yet, in my personal opinion. So, going to look at a couple of the markets here. So the first thing we're going to look at is XRP. Let's first go to the 4-hour chart. We're basically at the lowest point here at just under 15 cents. Crazy to think that XRP is at 15 cents here. It was at $3 at one point. I remember it being $3. It was nuts. Let's close this. Just go over current market structure that we're currently seeing, which is very, very simple. You can even make it like that. I think that's what I'm going to do. And then we got our key level of resistance. So we're not even going to do any more than that. We're just going to keep the horizontal zone on the 4-hour. And then on the 1-hour, we could draw somewhat of an ascending zone, but I don't really see a super valid level. So I'm not really wanting to jump right in. Like, you could find something right there. We got anchor point 1, 2, 3, 4, and then that would be potentially a dependable zone. It is a dependable zone, but I don't love that trend line really. We got another zone right around here, so we could touch those lower highs, but we're just in a consolidation right now. I don't really find the need to try to find that perfect entry because we're super choppy right now. We're just kind of chopping. We could bounce off the support and hold back up. So we're just looking for a break in either a key level of resistance or support within the consolidation to kind of confirm which way we're going. If we're going to break to the downside, we're going to have to make a lower low. And then we're going to look to enter on the lower high. But it's not like we get from point A to point B without any pullback, right? It can sometimes happen. For example, right here to here, we didn't get any pullback, straight move to the downside. But within the range, we're going to get pullbacks. We're going to get areas where we're going to have retests, and that's where we're going to look to enter. So that's XRP. Not a whole lot there. Link, for me, still is something that I don't really want to be entering because I just want to see the price be a little bit more stable, especially after this. Like I said before, there's other alts that have not had this liquidity issue, so I'm just not looking to gain any level exposure on Link until it's giving me more of a confirmation, or at least giving me more price action that is able to hold the price at the zone that we're currently in. I don't want to hold anything that has this level of volatility, so I'm going to stick with just XRP for now within the current time frame. And basically having the same situation as BTC. We could draw a little resistance here on BTC, but overall, we're mainly looking for a break in the resistance, in my opinion, because I think that could be something that we could be seeing here. So, not certain. Obviously, no one is going to be 100% certain, but I think the deflationary challenges that we are facing will continue, even with BTC. Sadly, I think we will get to a point where we will see a lot of buy volume and a lot of panic into Bitcoin, but I just don't think it's time yet. And then we got another trend line here. I'm not really even going to be drawing the trend lines because I kind of know where they are. But even if it breaks the trend line, I'm not really going to be wanting to enter until we see a much higher high, right? I don't really want to be doing that. We do see a little bit more, we do see a little bit more clear of a trend line on this chart, but even then, I'm not really wanting to be entering, basically a safe bet would be if it breaks the zone, retests as a new level of support. If we get a somewhat of an entry here, you're looking at a risk of like 13% and a reward of maybe minimum of, if you're risking 26%, like that's some crazy percentages here. So obviously you want to lower your position size right down so you're able to incur that 10% loss. Size it down tenfold. So instead of risking, let's say, $1,000, you're risking $100 or whatever the case may be. Playing with position sizing is very important to understand risk management, to understand how much risk you're wanting to incur on any given trade. But EOS is going to be the same thing. We're just within a consolidation. We do see higher lows coming into the market, but we do see a hesitation where we're not able to make higher highs. So we're holding up against the resistance, but we still are seeing these higher lows. So we're going to wait until we see a potential break, a pullback, or we're just going to break this zone here. But we're going to remain very patient right now and mainly look at Bitcoin for our trade. BNB is pretty similar. This is that descending level of support that we're currently holding. So if it does break that zone, we can expect quite the move to the downside because this support has been holding for the past 2.5-ish days here. Almost 3 days. So we're kind of seeing something similar to BTC. We're seeing a resistance and support within a zone of consolidation. And on this zone, it's going to be right here. It's going to be the last level of support. Oops. Where you see it, resistance, support, support. And now we're kind of just ranging within this zone. We'll see where it goes. But like I said, if it does go below our structural support, we are going to be looking to potentially short the market again. Because in these massive economic uncertain times, even safe haven assets are deflationary before they see price appreciation. Talking about that within the start of the video, very, very important. All right, so last pair is going to be on Ethereum. Ethereum is basically in a very similar structure to a lot of our other alts. We see a nice level of support get tested here multiple times. And we currently have our support zone around here. It's a little bit bigger of a support zone, but that's okay. And then we also see a nice ascending zone right around here. Don't really need to be drawing that in, but let's just do it. Why not? So we're making lower highs, holding a structural support here, not making a lower low. If we're able to make a lower low and then we're able to create a lower high, testing the previous support as a new level of resistance in confluence with the descending zone, seeing more sell volume than buy volume, maybe with no demand at that confluence zone, that would be a potential opportunity to get that entry from here to the next level of support at around $100, let's say, giving a pretty significant move of around 15, 10, 12-ish%, somewhere around there, which would be a pretty good opportunity. But for now, I'm mainly going to be looking at BTC for this potential here, because if we do get that move to the downside, a lot of these alts will be just pushing even further. If someone's going to be investing in the cryptocurrency market and they want to be safe about it, let's say, or pick the highest probability success rate in the cryptocurrency market, it's going to be Bitcoin, because it's the longest lasting. It has the highest dominance by far, and there's been nothing that's been able to even compete with Bitcoin in its inception in 2009. There's been nothing, right? Its dominance is what, like high 60s, 69, 68? Let's just see. It's 63%, 63.8%, right? So it's a significant majority of the market. So it makes sense to, if you are going to hold anything, hold the coin that has the most, the largest network, the most amount of history in terms of the validity of it, in terms of the historic price action it's had, and the great run. It's basically the safest investment in the crypto space, in my personal opinion, as long as you are storing your crypto in a safe location. If you have a ledger, if you have even a paper wallet or whatever, better than an exchange if you're just long-term investing. So that's the crypto market update. I really hope you enjoyed it. We definitely went over a little bit more in depth of the different economic factors that are currently at play here. We also went over BTC and what we're going to be looking for within this upcoming week ahead. If we do start to see some sell pressure coming into the market, short the fuck out of it, in my personal opinion, because we're seeing a massive amount of sell pressure overall in the market. And I'm not going to assume that, this level of support must hold. Like there's no level of support that I'm going to say that it has to hold. It's a free-for-all. It's the Wild West, right? And an uncertain time that we're currently seeing within the overall global macro sense, I think we could see more downside. Overall, not just a little bit, but like quite significantly here. So we'll see how it goes. We'll try our very best to be very open-minded to see what the market brings us. We're going to be very patient. 100% honesty. We weren't as patient as we should have been within this consolidation. I should have noticed it earlier on. I should have noticed that consolidation forming, that decrease in volume coming in. I should have noticed it, but I didn't. We took a couple trades, didn't go so well. We managed to reduce our risk and cut losses on both of the trades. So it's not like we were crazy leveraged, took high risk or anything. Very, very well managed. We knew exactly what we were getting ourselves into, and we managed risk even more while we were in the trade, meaning we reduced our risk by like 50% or maybe even more on one of them as the first one. So we did manage to reduce our risk, but at the end of the day, we still took losses where we shouldn't have taken losses. We shouldn't have entered in that position. We entered a short at this next down here, which made sense. Great setup. Ascending trend line. It's a nice ascending wedge here. Great setup on XRP, and we took that trade and we made profits on it. Great trade. But within this zone, we shouldn't have entered a short here. I definitely should have understood the market structure a little bit more, but that's not a problem. We look back at our Excel sheet, we look back at our trades, and we assess it, and we think, okay, how could we have done this better, and what could we see in the future to try to create a better opportunity where we're going to have a higher probability situation for an entry. And looking at this upcoming week ahead, I think this could be an opportunity that we could be seeing. So definitely, if we are seeing the momentum start to push to the downside very significantly with aggression, we're going to be looking for that short. Also, we're going to be looking at the S&P, going to be looking at commodities like gold and oil. So it'll be an exciting week next week. Hopefully, you guys are going to be with me, or hopefully, you guys and girls are going to be with me for the upcoming week here. We will be doing crypto market updates every single day, going over many different asset classes, so it will be interesting to see. Also, we always like to keep everyone updated with coronavirus and our Discord. We have right here COVID-19 discussion. So anyone talking about like interesting things involving this pandemic will be on this discussion. We're talking about even things like 5G, not super relevant, but still talking about somewhat conspiracy theory, interesting stuff that kind of tickles the brain in terms of thoughts and what could play out here. So it's very interesting. But if you're interested and having a community where you can talk more about this, especially if you're kind of locked down and don't really have a whole lot to do, there's a lot of activity within our Discord. Absolutely free to join. If you do want to learn how to trade, we do have a subscription service that we offer where you can learn how to trade similar to us. But if you're just learning how to general invest in cryptocurrencies or anything, we do offer free information for no cost whatsoever, as well as a community where you could talk to other traders and investors that have similar passions to you, which is a value within itself that we love to provide. So thank you very much for watching this crypto market update. I hope you got some value out of it. Not much more to discuss. I think we might do another video if BTC does something interesting today, but if not, we're basically just going to sit and patiently wait until it does something. We're in consolidation. I don't want to be trading this whipsaw action that we're seeing right now. I'd rather patiently wait until I see a little bit more of a better momentum opportunity where I'm able to capture a strong move either to the upside or downside. So thank you very much for watching, and until next time, happy trading.